up next, take copious notes. I've got lists of macro positions that will get you paid both domestically and internationally. Now, the year 2017, as it relates to trading and investing, will go down in history as a remarkable one indeed, particularly for financial markets. Although Wall Street braced for an unmitigated disaster in the form of His Royal Highness Donald Trump's administration, the end result was surprising, and I told you so, and we have monetized His Royal Highness left, right, and more so. Now, the broader market improved, sending most sector exchange-traded funds flying. Now, investment advisory firms are churning out lists of ETFs to actualize as rapidly as they can write the list up, because the surge in capital markets was and is so intense. It was easy to conflate profitable with superior strategy. Long-feared bearish cycles never truly appeared, and getting a loser in your portfolio was a fairly difficult task. As long as you stayed away from speculative investments or chronologically losing sectors, okay, you did all right. Now, everyone wants to know, how long will this tailwind last? Okay? Now, at the end of the day, nobody knows. But you need to understand and overstand, okay? 2018 could be a make it or break it moment for His Royal Highness Donald Trump. Let me go further, okay? Now is the time. Now is the time to separate winners from losers. Now is the time for you to drill down. Now is the time for you to see now what others see eventually as it relates to your macro positions, your ETFs, your macro positions that hold micro positions, macro positions that allow you to get paid multiple times utilizing our Asset Wealth Institute holding strategy. So, what I'm going to do is give you a list of positions that will allow you to get paid both domestically and internationally via micro positions that have macro positions that have micro positions contained in them that will get you P.A.I.D multiple times. Let's first start out with Technology Select Sector Spider Fund, symbol XLK. Write that down. Technology Select Spider Fund, symbol XLK. Now, technology was smoking hot, okay, last year. And it will be this year. Now, over the trailing one-year period, XLK gained nearly 36%. The amazing performance beat out every other S&P 500 sector fund. Naturally, the XLK belongs on anyone's ETF list to actualize or buy it open, including any fellow contrarians. Now, considering the enormous potential of the technology sector, a pullback may be a long time coming. Today, a tech investment isn't just about computers, devices, and core components. No, it's taking the next step forward, beloved, from a merely useful tool to one that has an intelligence of its own. Now listen to me. And I'm telling you, put the ASK THE WIZ Wealth Institute holding strategy on this XLK and get paid out the kazoo. Among XLK's top holdings include Alphabet, symbol GOOG and GOOGL, and Nvidia, symbol NVDA. Family, both companies pioneer evolutions in data analytics and predictive technologies, and both will be mainstays in the industries for the foreseeable future. Yes, XLK has enjoyed steadier returns recently, okay? But remember, sometimes a good performance is just that, a good performance. XLK, family members. Next ETF to get your P.A.I.D. We're talking about a macro position to get your P.A.I.D. We're going to stay on the subject of technology. I want to bring to your attention ARK, spelled A-R-K, ETF Trust. Trades under the symbol ARKW. Now, I want to bring to your attention ARKW as an actively managed fund that focuses on companies working in next generation sectors like cloud computing and big data. It has a nice mixture of recognizable names as well as lesser known speculative companies. Now there's a company, a name that you need to only worry about. There's only one name that you need to worry about. And that company is called, listen to this, Bitcoin Investment Trust. It trades over the market, over the counter, under the symbol GBTC. Now, it's the top holding in ARKW, ARK ETF Trust. And this particular ETF is banking heavily on Bitcoin and cryptocurrencies. Now, while that may seem like an unnecessarily heavy risk, those that want to get all caught up in the Bitcoin hype and not focus on the underlying technology, the blockchain, well, then this is where you need to go. ARKW. Now, Bitcoin and blockchain are the ultimate disruptors. Everything that society knew about business and finance will change over the next several years. And as such, the cryptocurrency rally may continue, but let me tell you something, that blockchain technology is going to be there come what may. And at the end of the day, if you just want to have a clever macro play on cryptocurrencies, then you're going to look at that ARKW. Next position I want to give you ties into what we talked about earlier. That's right, defense positions. Write this down. Macro position to get your P.A.I.D, another macro position. Outside of that PPA, to get your P.A.I.D from defense, military defense, is the iShare Dow Jones U.S. Aerospace and Defense ETF, symbol ITA. Add that to the other macro position I gave you earlier in this Classroom Not Walls Radio broadcast, ITA. Now, if you watch something called the news, you immediately understand why I include ITA. The North Korean missile crisis is very, very real and no longer a, quote, Asian problem, end quote. For decades, both liberal and conservative administrations did nothing as North Korea perfected its intercontinental ballistic missile technology. Now, according to physicists, the rogue nation has the capacity to hit Los Angeles in under 40 minutes. You see, we're dealing with a complete madman who is attempting to blackmail the United States into submission. Furthermore, the asymmetric nature of this conflict favors North Korea. And therefore, the United States simply has much more to lose. You see, to send a strong message to North Korea, as well as its allies, China and Russia, the United States needed to and needs to demonstrate that a, quote, reign of hate, end quote, as some of the administrations has mentioned, will fall upon any country that attempts to incinerate Americans. Now, this intense situation practically guarantees that ITA and the defense industry will have many profitable years to come. So you got that ITA with all its holdings, many of which are replicated in that PPA. And you get P.A.I.D from all the politics that are going on around the world. Next position I want to give you is a position that will get us P.A.I.D from one of the United States stepchildren. We're talking about Japan. The iShares MSCI Japan ETF, symbol EWJ. Now, let me break this one down for you. Many people overlook EWJ. Japan suffers from a credibility problem as I speak. And for several years, administration after failed administration attempt to address Japan's woeful economy. Now, should any more failed attempts occur, Japan would have been on track to suffer a lost century. Okay? Thankfully, a man named Shinzo Abe appears to have discovered the magic formula. Now, while Abe is controversial, he was recently embroiled in a cronyism scandal. His powerful leadership secured him more time in office. This added stability is critical for the position EWJ. Okay, we're talking about our ETF here, as well as for the entire nation of Japan. You see, judging by the performance of core companies like Sony Corporation, symbol SNE, Abenomics appears to be working. And moreover, His Royal Highness Donald Trump essentially mocked Prime Minister Abe. Okay? And see, you have to read between the lines. Due to Japan's apparent, quote, unwillingness, end quote, to pay for its defense. Now, an alarming lack of historical context aside, His Royal Highness Donald Trump might push Japan to rearm. That may trigger Japan to bolster its armament industry, which would have a long-term positive impact on EWJ. Do you understand and understand the politics and how to see behind the curtain and play His Royal Highness Donald Trump, Prime Minister Abe, and EWJ to get your P.A.I.D. Next position to get your P.A.I.D., talking about macro positions, during 2018, is your play on gold. We're talking about that Spider Gold Trust ETF, symbol GLD. Now, while many people are eagerly awaiting, okay, this year to completely unfold, to get into maybe February and March, okay, people are waiting to see exactly how the shiny yellow metal is going to respond. You see, both domestic and abroad, we've been inundated with tragedies, senseless violence, political unrest, and even the threat of a nuclear war, which I just made reference to. In times like these, family members and listeners alike, nothing shines brighter than that shiny yellow metal, gold. But if you don't want to lug around physical bullion, the Spider Gold Trust ETF, symbol GLD, is a nice alternative. Okay? Back when commodities were the hot ticket items, precious metal experts expected and predicted that gold prices would hit $10,000 an ounce. Silver in turn would hit $500 an ounce. Well, people are still making these predictions along with incredibly dubious world event forecasts. Strangely enough, it was Bitcoin and Ethereum, not gold and silver, that hit 10,000 and nearly hit 500 respectively. Now, listen to me closely. With all that said, 2018 really could be a year for the shiny yellow metal and GLD. You see, we've got geopolitical tensions, okay, that continue to escalate. We are engaged in both hot wars and cold wars. The United States is extremely divided, and unreal developments like the rise of certain hate groups is indeed becoming all too real. Now, GLD doesn't solve any of these problems. What it typically does, though, is it jumps on the fear trade. And there's plenty of that going around. So what you want to do is you want to look at the fear index, the VIX, symbol VIX. When you see the fear index go up because of global politics or some type of horrific tragedy, okay, and you see the market go down, we're talking about that DJX, we're talking about that IXIC, we're talking about that SPX. DJX equals what? The Dow. SPX equals what? The S&P 500. IXIC equals what? The NASDAQ. When they move down to the downside demonstrably, the VIX, VIX will rise, the proponent fear index, and so will the shiny yellow metal. And the cheapest way to monetize that set of circumstances is GLD. Spider Gold Trust ETF. Next position I want to give you is the Sprott Physical Platinum and Palladium Trust ETF, symbol SPPP. That's SPPP, Sprott Physical Platinum and Palladium Trust. Now, near the beginning of October of 2017, yours truly noticed a remarkable event, and that was platinum spot price dipped into the range of the low 900s. Now, that by itself wasn't remarkable, as the precious metals have been disappointing for years. Rather, gold bullion was priced somewhere around $1,270. Now, at that moment, gold was priced nearly 40% higher than platinum. Now, I try not to argue with the markets. I just get paid from the markets. Bull, bear, I don't care. But nevertheless, not only did that make no sense at all, okay, we're talking about the SENSE or CENTS, that couldn't make any SENSE or CENTS. You see, a commonly cited statistic is that all the gold ever mined, okay, since the beginning of time, listen to me, all the gold ever mined could fit into an Olympic-sized swimming pool. You see, gold is rare, but all the platinum mined in human history could fit in an average-sized living room. You see, platinum is exponentially rarer, which is why yours truly likes the Sprott Physical Platinum and Palladium Trust, symbol SPPP. Although physical bullion is much more fun to acquire, the SPPP has a significant advantage, and the uber wealthy all have positions in SPPP very quietly. You see, physical platinum features wide bid-ask spreads, making profitability more challenging. Furthermore, the platinum market isn't nearly as liquid as gold. So, with the SPPP ETF, you, me, we, the Asset Wealth Institute family, okay, and the uber wealthy, they're doing it as well. We can enjoy trading in relatively robust markets without having to deal with storage and security. And finally, the SPPP ETF gives you coverage on palladium. With the exception of 2015, palladium has been a consistent winner amongst the deflated precious metals. And yours truly expects that trend to continue, given palladium's rarity and the fact that Russia, remember this, Russia controls most of the world's supply of palladium. Next position I want to give you is the iShares MSCI Chile ETF, symbol ECH. Now, many analysts really like ECH. And while I have no issues investing in standard or popular funds, I receive greater satisfaction finding lesser known obscure names. Of course, none of these emotional sentiments matter if you're not getting P.A.I.D. Now, fortunately, ECH has proven to be a powerhouse. Okay? Now, since August of 2016, the Chile-centric fund has gained more than 20% in the markets. Up until recently, the ECH had gained 37% since the date of publication. However, the fund took a sharp dive as a massive correction in the Chilean markets sunk all boats. Nevertheless, ECH is up 20% for the year already. And moving forward, I view the current dip as a possibility or a time to be able to get in and actualize or buy to open a position. Now, for all the talk of next-gen technologies, none of them would pass muster without what? Commodities. You see, amongst the most important commodities for the tech sector, one of the most important commodities is, listen to me, lithium. Lithium. One of the most important commodities for the tech sector is lithium. And Chile is one of 3 countries sitting in what is known as the lithium triangle, which also includes Bolivia and Argentina. I repeat, write this down. The lithium triangle consists of 3 countries, Chile, Bolivia, and Argentina. You, me, we, the ASK THE WIZ Wealth Institute, we need to finance that. We need to get paid from that. And how do we get paid from that? ECH. Now, although Chile is not necessarily considered a tech hub, it might as well be. Advanced nations like Japan and Australia are making heavy inroads into the lithium triangle. And that trend will only rise. ECH is one of the best ETFs to get us P.A.I.D. intelligently during 2018. In the next position, boy, don't we know this one well. We get paid from this position right now. In fact, we're getting paid from it right now, okay, because it's one of our energy-related positions, more specifically our oil-related positions, talking about that SPDR S&P Oil and Gas Exploration and Production ETF, symbol XOP. I said XOP. Now, since the energy market collapse that began in 2014, oil companies have represented a poor place to park your money. I get that. Multiply that sentiment 5-fold for oil and gas exploration units. Now, as one of the most speculative branches of an already speculative industry, exploration companies were destined to get the full brunt of the fallout. However, 2018 might be the year that fortunes change. That's why analysts are keeping their eye closely on SPDR S&P Oil and Gas Exploration and Production, symbol XOP. Now, one of the advantages of actualizing and buying positions in a deflated sector is that the remaining names are typically the strongest ones. The ones that survived the carnage. And in the oil industry case, surviving companies were forced to integrate fiscal discipline. And while painful at the time, these sacrifices set the stage for XOP to potentially recover. Now, fundamentally, the winds favor XOP bulls. Domestic oil production is tempered, while OPEC continues to push for production cuts. And crude oil prices may rise from the multi-year lows, which would help make explorers profitable. You got sent to your cell phones today via P.A.I.D. alert that crude oil prices were indeed up. Why? Because barrels that were in storage were down. Combined with the aforementioned fiscal discipline, opportunities like the XOP suddenly look much more attractive to you, me, we, the ASK THE WIZ Wealth Institute family. SPDR S&P Oil and Gas Exploration and Production ETF, symbol XOP. Now, the next position I want to give you, talking about ETFs, is Fidelity MSCI Healthcare Index, symbol FHLC. That's Fidelity MSCI Healthcare Index, symbol FHLC. Notice I'm diversifying. I've done the homework, so you'll pass the test. You're getting your diversification and strong positions that will get you P.A.I.D. consistently for 2018. Now, healthcare is a politically charged topic, so I'll try to be careful at this point. You see, universal health care is akin to the old adage, there's no such thing as a free lunch. Somebody always pays. And according to some, under Obamacare, premiums soared. Now, under His Royal Highness Trump care, who knows? Currently, Washington resembles a loony bin more so than the heart of American power. Nothing seems to be getting done there. However, one thing you, me, we know about His Royal Highness Donald Trump. That is, he's a pro-business proponent. He wants to run America like a well-oiled machine, supposedly. Primarily, this means investing in productive assets and cutting off the excess fat. Now, to further the analogy, government bureaucrats, like the FDA, are downright obese. According to a recent CNN report, His Royal Highness Donald Trump was deeply troubled about how slow potentially life-saving drugs enter the market. His comparison spells big profits, family members, for you and me. Buying through Fidelity MSCI Healthcare Index ETF, symbol FHLC. That's FHLC. You see, let me explain it to you. A more efficient medical regulatory process should translate to higher revenues for pharmaceutical companies. Additionally, medical equipment companies can take their products to market much faster than before. Irrespective of whatever happens to the insurance front, FHLC, the ETF, will win and get you, me, we, the ASK THE WIZ Wealth Institute family, P.A.I.D. Now, another bullish factor for FHLC is the diversification in the portfolio. You see, FHLC is evenly balanced amongst pharmaceutical companies, biotechnology companies, and medical equipment suppliers and makers. Moreover, the FHLC holds 345 stocks, providing greater coverage than their rival ETFs. Family members, you gotta do a drill down on FHLC and see if it's applicable for entry into your portfolio and utilize our holding strategy along in conjunction with the ERs on those micro positions to get your P.A.I.D. Next position I want to give you is a position that allows us to monetize our friends to the north. We're talking about old Canada. Talking about that iShares MSCI Canada Index ETFs, symbol EWC. Now listen to me. With all of the chaos, with all the drama that's occurring in this country, the United States, it's nice to find stability. It's a good thing. And for many traders and investors, that comes in the form of the iShares MSCI Canada Index ETF, symbol EWC. Shows that resource-rich Canada, and by logical extension, the EWC ETF, should find plenty of opportunities under His Royal Highness Donald Trump's administration. For starters, His Royal Highness can use all the allies he can get at this particular time. And more importantly, the White House stance on the environment, or lack thereof, opens the door to robust energy sales. And I think we can all agree that getting our oil from Canada is a more palatable proposition than other sources. Lastly, okay, we need to continue to monitor one of our MAG 7/15 positions. Coming back home, just showed you how we're going to monetize our friends to the north, old Canada with EWC, but now let's come back home. Talking about one of our MAG 7/15 positions, I want to bring your attention to that SPDR, S&P 500 ETF, symbol SPY. Now, SPY has indeed been on an incredible run. It has paid us consistently throughout 2017. However, all good things must come to an end. And although I'm not trying to call tops, I will say that the longer the United States market bull run exists, the greater the probability of a correction, because all that actualized profit is not monetized profit. So, by investing a portion of your capital in EWC, it helps mitigate some of the risk of the impending burst of the bubble provided buying through the S&P 500 affecting SPY. Are we clear?